Hello, everybody. Welcome to a special live episode of the TF Podcast, where we discuss technology, finance, and business. My next guest, his name is Samson Williams. We're going to be talking about fundraising, equity, crowdfunding, the trials, the tribulations, the good and the bad. It's actually the first time, not the first time, but catching up with Samson. We met a couple years ago on stage, actually, at an event when you could be in person and you could shake people's hands. So either way, it's good to see him. So with that, please welcome Samson. How you doing, my friend? Uh-oh. You're muted, bud. There you go.
Hey, what's up, beautiful people? Technology is amazing. I know, like most of you, I'm zoomed out. I wish we could, I told someone, if I can't smell you, I don't want to drink with you, because I got invited to a virtual happy hour. It's like, that's not going to work. Awesome. But happy to see you again, Jonathan. It's a long way from South by Southwest, both physically, mentally, and spiritually.
Definitely. Well, Samson, could you do us a favor and introduce yourself to everybody, please?
Oh, yeah, sure. Cool. Hey, beautiful people. My name is Samson Williams. I got a bunch of jobs. Today, we're going to focus on, I'm president of the Crowdfunding Professional Association. That's cfpa.org. And it's also a way of disclaimer. I know a lot about Jobs Act, equity, and debt crowdfunding. And I'm also host of the Space Economy Show on the Space Channel.
Nice. Well, we're going to spend a little bit talking about the space stuff first, because where did your love of space come from? I hear you talking about that kind of stuff too. So,
I don't know anyone. Yeah, I don't know anyone who didn't grow up watching Star Trek, and if you didn't, shame on you. You know, you're so uncultured. And so, growing up in East Texas, as a small kid, you're just staring up at the Milky Way before we had all this good old-fashioned light pollution, and it's like, what's out there? And so, this is where my interest in space started. And most people, they don't think they're related to space or this concept of the space economy.
Yeah.
But it are. If you've got one of these magical devices called a supercomputer that you typically just get on social media, you're connected to the space economy already. And so this is where the fifth industrial revolution happens in space. And since we're at some point, we're going to talk about startups and businesses. Anything that you have here on the Earth as a business, there will be a place for it, or could potentially be a place for it in space or low Earth orbit, or the moon, and eventually Mars and beyond. So it's a very exciting space. Yeah. It's super cool. I talked to a lot of really smart nerds, and it's just good to talk to people who are little rocket scientists. And it's like, oh, you guys are solving problems for space that we can actually use down here on Earth. Because we were talking to someone from Monty Roman, from NASA, and she said recycle or die in space, because you've got to build things that are sustainable, because in space you recycle everything, including your pee, because it's just expensive to get water into space at the moment.
Right. Well, I mean, I think we're going to have you come back for a different show, and we're going to talk about space, because I do find that interesting as well. So back to why we're here, we're going to be talking about crowdfunding and fundraising and so forth. So, before we even get started, if you are watching the stream right now, do us a favor and just say hello. Let us know where you are listening from, what city you're at. And then also feel free to ask questions. We're going to do our best to make sure that we answer them throughout the show. So Samson, how did you get involved with crowdfunding? Like, when did you start paying attention to that as a viable method of fundraising on the startup path?
Well, yeah, in 2016, I was working at a small company called Fannie Mae. I was doing evil empire stuff in their executive office, learning about, I know a lot about mortgage operations. And so a friend of mine, he introduced me to the Jobs Act, the Jumpstart Our Businesses and Startups Act. That was going to be signed on May 16, 2016. And what that enabled is investment crowdfunding, because most people think of, hey, they've heard of crowdfunding, but they think donation. If you've ever been to church or synagogue and they pass a hat, that's all donation crowdfunding. But when I talk about crowdfunding, I'm talking about investment crowdfunding. So if you've seen Shark Tank or Dragon's Den, if you're on the other side of the ocean, it's where you're making investments into businesses. And so now since 2016, through the Jobs Act, anyone, retail investors, quote unquote, unsophisticated investors, can invest in your business or your startup. And that's just a monumental shift. Right now, we have to spend a lot of time on education, just letting people know, hey, it's an option. Maybe they could explore it, maybe not, but it's an option. And so this is where we're at with Jobs Act investment crowdfunding.
Yeah. And it's so right now, if I'm correct, isn't it the maximum that you can you can raise on a crowdfund $1,070,000? It's like a million, some small number.
So there's a bunch of disclaimers out there. Visit our website, cfpa.org, the Crowdfunding Professionals Association, to learn some of the nuances. So I'm going to give you a high level of what you can raise. So there's about 4 different regulations we're going to focus on. Reg CF, because regulators are very imaginative, so it's just called Reg CF. It stands for Regulated Crowdfunding. You can raise up to $1,070,000. Don't ask why $1,070,000. Why is $70,000 is some arcane, silly reason. So just think $1 million bucks. And that's from anyone, retail investors, your customers, accredited investors, sharks, angels. Up. My web might have blinked for a moment. The next one is Reg A Plus. And in Reg A Plus, there's 2 tiers. You can raise up to $50 million from accredited and retail investors. Then you have...
Oh, we might be having a little bit of technical difficulties with Samson. So we'll wait for him to come back here. But yeah, thank you for everybody that's watching. If you are watching, do us a favor, put in the comments where you're watching from. Ask any questions that you might have, and we'll do our best to get to it. And Samson, we got you back. You're back.
I don't know why the power wants to go out. I think the powers that be, they don't like us talking about how influential.
Oh no, we're losing him again. Yeah, Samson was about to say he doesn't know if the powers that be are not allowing us to talk about crowdfunding. But has anybody here done crowdfunding? Anybody that's watching or listening, have you done crowdfunding as a mechanism? We recently had Darren Marble on our show, as well as his co-founder, Todd Goldberg. Darren has quite a bit of experience with crowdfunding, led a company that did that for quite a amount of time. And now they're actually starting a show called Going Public, where they're going to be taking founders through the IPO journey. And they're going to do that as a Reg A filing, which is what Samson was actually just talking about there. So unfortunately, it looks like we lost Samson, but hopefully he'll come back. In the meantime, while we're waiting for Samson, does anybody out there have any questions they'd like us to ask or answer? Well, how about this? I'll tell you about what I'm doing. So I'm our company, TF Labs. We work with startups as well as build some of our own startups. And so we're currently actually ourselves investigating and seeing if crowdfunding would be an interesting option for us. And so I'll kind of tell you about that from the founder perspective. So from a founder perspective is, the traditional model is, hey, go raise money from venture capital and give a percentage of equity and so forth. Well, in a crowdfunding model, you essentially do that, right? You crowd fund from folks. And as a result of crowdfunding from those folks, you can actually solicit what you're fundraising for. So it's something that we've considered doing for our company, because usually if you have an audience, it's a good way to get your audience involved in investing into your company. And it looks like Samson is back. So I was just telling them kind of from a founder perspective how I've been considering potentially doing a crowdfunding as a fundraising mechanism, just because with TF Labs we have a pretty good audience, and hey, we have a community. Let's leverage that. But I want to go back to you on that.
So yeah, sorry about that. I don't know why the power wants to go out. It's 2020.
That's what happened.
Yeah. It's this 2020 thing, but. The last one I was talking.
This is getting comical. Did we lose you again, Samson?
It doesn't matter because.
Hello?
All right, buddy.
No. It should still be there.
I see you now. You see me?
Yo, this is so annoying.
No worries.
No, am I back or not?
You are back. I see you.
All right. Very quickly, raise money isn't earned. Just if you raise $10 million, you didn't actually earn it. You need to pay it back. Who pays it back? Your customers, first and foremost, particularly if you're in the VC angel world. Point number 2, in case we get cut off, customers have more money than investors. Say that again. Customers have more money than investors. Why? Because who do you think pays your investors back? Your customers do. So if TF Labs or your company, they have a community, you've never been able to engage them in raising capital for your business because the Jobs Act is still fairly new and people don't know about it. And the powers that be try to silence people who are trying to inform the world about it, right? And so, but remember, there's so many details. There are a few details because you are doing regulated crowdfunding. It's with the Securities and Exchange Commission. So again, 2 of the big things to realize: raised money isn't earned. If you raise $2 million, $5 million, $10 million from VCs or angels or hedge funds or private equity, they're expecting a 10, 20, 100. You need to pay them back, period. They're expecting to get paid back. And so this is where raised money isn't earned. The other thing to keep in mind is that customers have more money than investors. You've never been able, until the Jobs Act, to engage your customers as investors. So just think about this, and it'll really help you think of, do I want to engage my customer base as potential investors in my business? Are you still there with me, Jonathan?
I can hear you. Yeah, you froze a little bit, but we can all hear you, so that's great.
Okay.
And I think that's a super interesting point that you said there, that your customers have more money than investors. I'd love to just continue to unpack that, right? Because your customers have a continual relationship with you. They're engaged with you, whether they're buying, products on a monthly, annual, whatever that basis is, or services. And so, yeah, tell me more about that. Why do you say that? And how have you seen that come into fruition, say, with people who have done crowdfunding and so forth?
Mm-hmm. So number one, most people, and this is why I love Y Combinator, in the sense that they provide you access to a lot of data that they track. So and this is pre-COVID numbers for Uber. Uber was spending $6 billion a year on customer acquisition costs. Like, how much does it cost you to onboard your customer, right? That's marketing and advertising. And so if you think about it, if you're a business, you're going to spend money on marketing to begin with. Why? How else are you going to generate sales? It's either word of mouth or marketing. If you've got a word of mouth sale, that's amazing because that reduces your customer acquisition costs, which is great because the lower your customer acquisition costs, the more money you get to actually keep. And so when you think about it, we developed this called triangle financing. Is really complicated. This is marketing and sales. You're going to spend some money on this because you need sales to generate revenue, unless you just don't want to generate revenue. Over here, you have brand. And as you spend money on marketing and sales, it actually increases your brand, which increases your market share, your brand awareness, and ultimately lowers your customer acquisition costs. Sales, marketing, branding, right? And if you might not know this, but as a new founder or starting a business, you can easily spend $60,000, $100,000 on both of these, and not even super easy, right? That last part, and this is where triangle financing or investment crowdfunding comes in. Sales, marketing, branding, the base of the triangle, that's your customers. How do you get these customers to be loyal? You incentivize them by giving the opportunity to have skin in the game in your business. So before the Jobs Act and investment crowdfunding, you couldn't do that. But since 2016, sales, marketing, branding, market share, now through investment crowdfunding, you can engage your customers to be loyal to your brand. For instance, I have a Dick's Sporting bottle, right?
Yeah.
I don't own any bit of Dick's Sporting's goods, but if I did, if this was coffee, for instance, never walk into my house or office with a Starbucks, right? It's like, hold up. Do I own a piece of that company? For every coffee that is sold, am I going to earn a nickel? If the answer is no, why are you bringing that coffee into my house, into my business? And this is where triangle financing, where you use investment crowdfunding to engage your customers, you make them super loyal. So if you remember, we talked about Reg CF, where you can raise up to $1 million. In a good crowdfunding campaign, you have 2,000 people who've invested a paltry $500, because individually that $500 is nothing, right? You're trying to start a new business. You need $1 million. a burn just to get through the first 6 months, maybe. But now through investment crowdfunding, you can aggregate your customers. They each put in $500. They already love your good product or service. They're already users of your PIN or whatever your service is. And so now you further incentivize them to be gospel, to be disciples, to be evangelists for your good product or service.
Right.
And so this is where this gentleman, Michael Lloyd, he just dropped an LP called Spinach. But before he did that, he went on Invest in Main Street, I want to say, and he raised $107,000 for his business, which is called Dope Coffee. So if you go to, I feel like it's Real Dope Coffee or realdope.coffee, you can see what his business is about and why this is so interesting, because he had 87 investors who invested $107,000 in his Reg CF deal. And it's like, why would you do that? Because now none of his coffee investors, they don't drink Starbucks anymore, right?
Mm-hmm.
That $4 or $5 you're going to spend every day at Starbucks, now through a subscription model, he has a dedicated core of 87 people who've invested in him to go be marketers. Because he said, hey, if you invest in me, you will now work for me. He's giving you something to do. I think the person who's really used Reg CF really exceptionally well is a woman named Dawn Dixon. Apogee. I think she just got married recently. But if you go to dawndixon.com, she runs a company called Popcom, Popcom. And so they're a vending machine SaaS solution business. So in 2018, she raised $1,070,000. She had like 2,200 investors. I want to say in March of 2020, she closed on a second round of $1 million, of $1,070,000 on Start Engine. And Start Engine is a FINRA, or financial regulatory approved crowdfunding portal. There's about 52 of them out there, so you have some choices. She closed on her second round. And I don't know, can I curse on your show? Because she told me something, I just want to repeat it.
Yeah.
Excellent. I met Dawn at the Capitol Hill in Washington, D.C. She was there talking about blockchain, cryptocurrencies, as well as crowdfunding and capital formation and how women can access capital. And so one of the things that she said was when she was able to do her first raise, it gave her fuck you money because she was able to raise $1 million. Therefore, when VCs came to her, fuck you. I don't like your terms. I don't want your money, because not all money is good money. And it puts you in a different position because in this instance, you have customers who are saying, I'm invested in your company. And now they're just not a customer. Because the real question is, what's the lifetime value of a customer versus the lifetime value of an investor? Right. So an angel investor or any investor, accredited investor, they put in $1 million into your business. You're going to spend approximately 60% on that on customer acquisition costs. And so you can go to Y Combinator, go into their database and see how much do businesses spend on customer acquisition. And it's a huge number. I cited Uber earlier. So 40 to 60% of the money you raise, you're actually spending on customer acquisition, meaning you got to go out and find customers. If you've already built that network, built that community, put in that work, there is some sunk costs in it. But if you're TF Labs and you have a community, but you've never engaged them, well, why not? Have you ever told your community, whatever your business is, do you want to have a little bit of ownership? So the VCs will say, oh, crowdfunding is so messy. It messes up the cap table, blah, 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 blah. That's not true. What crowdfunding does is, particularly for seed stage and early stage businesses, it gives them an option. Because the banks, they don't want to lend to you if you're a startup. You don't have any revenue. And if you did have revenue, then yes, they would lend you your own money. And so banks are a no-go for you, are very difficult, and they have limited products. So you do have angels, but then you got to find an angel. And that angel may need to invest or want to invest in your good business or service. They might not invest in your industry or businesses like yours. The next thing is, after you consider banks and angels, it's like, okay, we can go the VC route. And one of the funnier, not so funny points about the venture capital route is that I want to say it's like 54% of founders are no longer a part of their company within 18 months of receiving VC funds, because you don't work for yourself now. You work for whoever invested in you. Because remember,
Wow.
raised money isn't earned. And so when you look at crowdfunding, whether you're TF Labs or whatever your business is, I don't care if you're a taco shop, right? There's La Bambas down the street. If they ever said, hey, Samson, you can invest in our business for $500. Yes, sign me up. I've got like 30 pounds on me because I eat there all the time, right? It's delicious food. And so, but now this investment crowdfunding is an option. And so it might be equity, it might be debt. And so it's like, just knowing that this is an option, particularly if you're a founder or a business, will expand your opportunity to say, okay, is this the right option for me? Do I have that community? Do I want to engage them to be investors? Because again, if your customer invest money for equity in your business, they're never going to go to a different business to do business. You got them hook, line, and sinker. Yeah, it takes effort to get them involved and let them know that they can invest in your business, which is why the Jobs Act investment crowdfunding it's almost 4 years old. It's a little over 4 years old now. And so as we're at the nascent stage of this industry, by the end of the decade, there's the current dynamics of how VCs go out and find early stage companies is going to completely flip, because companies are going to say, I have X number of followers on Instagram, X number of followers on social media. I have X number of customers, and these customers leave me great reviews. If you're getting 4 and 5 star reviews from your customers, but you've never asked them, hey, do you want to invest in my mouse company? Actually, this mouse sucks. Whoever made this mouse, right? This mouse is horrible. This mouse is great. Whoever made this mouse, do an equity crowdfunding offering for your company so I can throw $500 into your business. It's never been this investment crowdfunding has never been a thing before, but as more people look at it, they're like, yes. And I know we've only talked about raising $1 million or raising $107,000 and raising $1 million with Popcom and $107,000 with Dope Coffee. But in the Reg A Plus world, and in the Reg A Plus world, there's 2 tiers. There's a bunch of different regulations. Again, check out the Securities and Exchange Commission, FINRA, or the CFPA.org, or your lawyer who practices security law specifically for clarification. But in Reg A Plus world, you can raise up to $50 million. Yeah. And so you'll see that is an amazing thing, because most businesses, they don't actually need $50 million. And if they're mature enough to need $50 million, and you should know that Reg A Plus crowdfunding exists, go talk to the folks, Darren Marble over at Crush Capital. He's doing a really cool show called Going Public, where the Reg A Plus is also called a baby IPO, initial public offering. And so through his television show, he puts your business on TV, and then retail folks from the audience can determine if they want to make an investment. There's a lot of SEC disclaimers. I'm making it very simple.
Sure. Yeah, we've actually had both Darren and his partner Todd on the show in the last few months. So yeah, no, I'm really excited for what they're doing.
And when you have, so right now, if you've ever watched Shark Tank, right, it comes on ABC. I call that investor porn, because there's 5 people on stage. 4 million people watch it every week, but only 5 people can invest.
Yeah.
That's investor porn. I don't want to watch investor porn. I want to watch your business. I want to learn about your business. And then I want to decide, can I invest in your business? Can I put $1,000 into your business? And again, this is where VCs, they're not trying to make a $100,000 investment. But when you're talking about seed funding, seed rounds, typically around 250, 263, that's the number that most startups are looking at in their seed round. That's really too small for whales. But for your customers, that seems like, hey, I'm going to put a couple $100 into this business. That's something you should explore. And of course, because this is capital raising and investing, you can lose all of your money, every last bit of it, right? Yeah. But at the same time, you should still have that opportunity to have a little bit of an upside. And since we mentioned space, I'm going to mention Brant and Aaron from Spaced Ventures. They're focused specifically on raising money for aerospace engineering businesses. And we're having a little nerd fest because some businesses like launch, most people think space are like, shh, right? Launch. But there are so many businesses here locally, or when I say locally, I mean on the earth, that are space businesses. This thing, it doesn't work without the satellites that connect the GPS, the telecommunications, and the finance. So everybody's involved in the space economy, whether they want to know it or not. And so when we're thinking about the fifth industrial revolution, we're that next hot spot. In 1993, I could have explained to you, hey, there's this thing, it's called the internet economy. You're like, what's the internet? And then I have to explain to you what the internet was. But nowadays, I don't need to explain to you that Amazon, Netflix, Google, Apple are the internet economy because they're so interwoven into the economy. You don't bifurcate or separate out those trillion-dollar companies. And by the way, the only trillion-dollar companies are all internet-based companies. But we don't talk about the internet economy. So the space economy, that's the new internet economy. I have to explain it to you, define it for you. But then once we get away of space is the place where business is done, most people think rockets, right? Okay, what do the rockets do when they get up there? And that's when we're talking about satellites, that when we're talking about data mining. I was having a conversation with the folks from NOAA, the National Oceanic and Atmospheric organization. They're a space business because all of their satellites, so that you can monitor the weather there in Washington State, there in Seattle, there in the West Coast. For your forestry service, you rely on satellites. You rely on a space business. And so that's just the tip of what's happening. And so space ventures, they're specifically helping aerospace businesses look for capital, raise capital, and they're tentatively going to launch their own Reg CF platform in 2021, again, to help businesses and founders raise money.
Yeah, no, it's excellent. It's excellent. So it sounds like what you're saying, if you are a startup, you have a community behind you, or you have customers, Reg CF is a pretty good option. What about if a company is new and maybe doesn't have customers yet, or doesn't have, a community? Should they maybe wait to build that community first before they start thinking about crowdfunding? What are your thoughts on that?
I think you should start building your community regardless, because one of the first questions that any investor is going to ask you is, what's your traction?
Right. And that's going to be your whether they're investors that are investing through crowdfunding or a VC is like, what's your traction?
Yeah. Banks are not going to ask you what's your traction. They're going to just ask you what's your revenue. Right. And they'll be like, do you have a house you want to take a home equity line of credit on? That's how many entrepreneurs fund their business. Any other VC private equity, they're going to say, okay, what's your business model? What's your traction? Because if you're really selling an idea, you better have a rich uncle. Otherwise, it's not going to happen. If you already have an established investor network, if you don't have a rich uncle, if you're already part of an established investor network of savvy investors who are accustomed to writing $20, $50, $100,000 checks, then you could do a friends and family round and probably raise a couple $1 million, right? Because it's 10 or 20 individuals that you're talking to. Yeah. That may take you, and that would be done under a Reg D, private placement memorandum. That's still going to take you 18 months, and you're going to have hundreds of meetings, because you got to remember, they might not be an investor in your space, like in your industry. Then they may not like you as a person, because when you're investing at the idea stage, you're not investing in the idea, you're investing in Jonathan. Like, Jonathan's going to be able to do it. Doesn't matter what it is. He might need to pivot 10 times, because people, particularly if you've never had a startup or business before, you think it's a straight line. You're like, oh, success is such a straight line. When it's like an emotional roller coaster where you're all alone and bankrupt one day, and then the next day you're swimming in cash. And then it's hard to explain to people who've never run a business. The key to your overnight success is the first 10 years. Yeah. And then
the highs are high and the lows are low.
Yeah. So all this to say is you should be aware that equity crowdfunding, investment crowdfunding, debt crowdfunding, royalty crowdfunding, they exist. Do your research, find some books to read on it. Find a lawyer who's a securities lawyer. It's a very specific type of lawyer. who can actually help you and explain more in the detail to go and determine, okay, is investment crowdfunding right for me?
Yeah. Yeah. No, I think it's excellent. And we, there's definitely been some really good stories, people I've got to see that have done that. Are you seeing equity crowdfunding more when it comes to product-based companies, whether that be like a physical product or are you seeing like startups, software startups, companies in the having success crowdfunding?
Right now, the people who do crowdfunding the best, particularly Reg A Plus for 2 to 50 million, are the real estate guys, the REITs, the real estate investment trust. So they've got that model pretty much settled on, here's how you do a REIT. Here's how you crowdfund a REIT using Reg A Plus. But they're real estate guys. It's very vanilla after a while. It's like, oh, you're going to go buy a building. Congratulations. And so when you look at who else is using it, there's a heavy focus on tech because people are investing. Everybody wants to put in $100 in 2020 and then exit in 2030 at 100x or 1,000x or 10,000x, right? So if you go back in time, let's time travel right quick. It's 2001. It's after the dot-com bubble. You can pick up Amazon for $3.25 for $3.25, right? It's dirt cheap. It's $3.25 is overpriced, by the way, in 2001 for whatever the hell Amazon is. Because again, this goes back to your overnight success is the first 10 years. And so fast forward 2 decades, Amazon at $3.25 is super cheap, right? It's basically giving it away. And so when you're thinking about making investments, risky, super risky. All early stage investment is risky. You lose all your money, right? But that's the benefit of having a crowd invest, because now you're sharing risk. You're saying, hey, these 10,000 people are each putting in $100 to get to this $1 million goal. And why this is so great, and you actually want small dollar investments, is now you have 10,000 people who are doing marketing for you. You have 10,000 people who are like, this is the best pen on the planet. This mouse is the only mouse we will ever buy. And so this is where it doesn't matter if you're in the SaaS business and the product business, but if you are in the product business, you have the ability to take your customer, have them have some skin in the game, because they're always going to be talking about your product. Brew Dogs, there's some folks out of the UK. They recently bought a brewery. When I say recently, this is probably 2 years ago. They raised $60 million from their crowd, their audience. They make beer. And so that's the product. And it was just perfect because they engage your community, and they're able to raise $60 million to buy a hotel and install a brewery, because they went to their 15,000 member community who had invested in them before using crowdfunding and said, hey guys, we want to buy a hotel and turn it into a brewery. And so again, when people have a little skin in the game, $100, $200, $500, $1,000, $2,000, now you're incentivizing them not to be greedy, but to be advocates for their brand that they love. Yeah. And now we come back to triangle financing, sales and revenue, branding, and all of a sudden your customers are super loyal. Like, I am not loyal to Uber. I'm not loyal to Lyft. I'm loyal to whoever has the lowest ride. Yeah. But if I owned a bit of a car company, that's the only one I use. For sure. So yeah, a long answer to say, regardless of what your good business or product is, you should at least be aware that crowdfunding exists and explore it.
Yeah, yeah. For those listening, have any of you thought about crowdfunding? And it looks like Andre has crowdfunded before, who's watching. He has a question about the platforms, but before we get to that, I wanted to ask you, what do the terms usually look like when you set up a crowdfunding campaign? So how much equity do people usually give up? Is that all, I guess negotiable in the sense of it depends on what the entrepreneur sets, or how does that typically work?
So the entrepreneur is known as the issuer in the regulatory parlance. And so the entrepreneur or the issuer establishes the terms, and they have to give everybody in the crowd the same terms. There's no individual negotiations. And so part of the SEC requirements of whatever platform you're on, is that everyone can join the platform, see the specific terms, and then talk to each other, because the crowd also helps vet people. So it's like, no, that Jonathan Blanco, he's a horrible person. If you have 10,000 people who've done business with you before, they're going to be able to talk to each other. It's a requirement. And so the terms, it depends on the deal. If you're a pre-revenue company, again, it's just Shark Tank time, right? You have 10,000 Mr. Wonderfuls or Mark Cubans who are looking at your deal. And so how much equity, you got this pie, what is the slice that you're offering for what amount? And so let's just say you're offering hypothetically 10% of your company for $1 million, because that means your company is valued at $10 million. The crowd is going to discuss on the message board whether or not this is a proper valuation based upon your business model, your revenue, and your brand. And so you do have to be transparent. And so the terms vary. Sometimes they're equity, sometimes they're debt, sometimes they're a convertible note. You can even do royalties. So it's on a case-by-case basis. But regardless of which platform you go to, they all are required by law to have a level of transparency, because according to the regulators, if you're a retail investor or an unaccredited investor, meaning you make less than $200,000 a year, and have assets less than $1 million, excluding your primary residence, or $300,000 if you're married, now you're an unaccredited investor. So you make $150,000 a year, you have $500,000 in the bank, you're a moron, according to the regulators. And so they'll want to limit how much you can invest. And because of this, the issuers and the platforms have to provide more disclosures.
Got it. And so, moving on to the platforms, what are there particular platforms that you recommend, prefer for equity crowdfunding?
No, I would never do that, because that'd be a super big conflict. I think you should do your own research, number one, and never say Samson told you to go to a platform and look at it. But I can name you I can just give you a fact who the industry leaders are.
There you go.
You have Start Engine, WeFunder, Republic. Those are the top three at the moment. Again, there's about 50 crowdfunding platforms, and each one does something slightly different. In the donation-based and reward-based crowdfunding, you've got Kickstarter and Indiegogo. I want to say last year, Indiegogo in the donation/reward-based crowdfunding, they did almost $1 billion, which is just ridiculous.
On Indiegogo, though, they're not doing equity crowdfunding, though, right?
They're not. They're doing donations and rewards. And so when I say the word crowdfunding, I mean I have some stake in the company.
Sure.
So if you go to, here's a great thing to Google platforms FINRA, FINRA regulates. And it'll bring you a whole list of platforms, 50 odd or so of crowdfunding platforms that FINRA list. And then you can look at them and be like, okay, this is super cool. I'm interested in I forget their name. They're focused on solar power. That's all they do. They just focus on solar power initiatives. It's sort of like when I mentioned space ventures, they're focused on low Earth orbit and space. There's another platform out there called Bright. They have a very interesting model they're about to launch. They're focused on doctors' offices, because you go to a doctor's office and you have like 10 or 15 doctors who all have complementary practices. And so they're focused on raising money from the crowd, from crowdfunding for doctor's offices. I was like, that's really interesting. I never thought about that. Everyone has a doctor's office or goes to the doctor at some point. And so when you go to crowdfunding platforms, we regulate FINRA, you can see that entire list and just vet which platform might be most appropriate for you. There's a platform called Fundana, which does cannabis products, which is focused in the cannabis market. It's owned by another company, its parent company is called True Crowd, which has a variety of offerings, both in like the products, the real estate, as well as the tech sector. So while there's no perfect crowdfunding platform, you should definitely check them out and evaluate which of the platforms have an investor audience that most aligns to your product. And then you might just say, hey, I want to go to issuance. This is a Darren Marble crowdfunding platforms specifically for Reg A plus
Yep.
deals. And issuance, they actually tie into your website. So it looks like your brand is raising money for itself, which is, again, your customers have more money than investors do. So how do you turn your customers into investors, or rather, how do you let your customers know they can invest?
Yeah.
And so this is where the nuances of Jobs Act investment crowdfunding comes to play.
Yeah, definitely. Grayson, thanks for your comments about you haven't tried it yet, but you're kind of got some products, and Andre looks like he's had some bad experiences with one of the folks you mentioned. So, but that's funny. So that's a good thing you didn't recommend it. You just said who they were. But if you're watching, do us a favor and just share out the link to wherever you're seeing this. If you're watching this on YouTube, LinkedIn, or Facebook, do us a favor and share it and tag myself and Samson, and we'll make sure to also retweet what you do as well. And then also please make sure that you're subscribed on our YouTube channel and our different channels as well. Samson, what or how long should someone usually plan for before they even get started, like from planning the because I'm assuming you really kind of need to treat it like a marketing, aspect as well. And then also, once you go live with your crowdfunding, how long should someone be fundraising for? Is it like a month, a couple months?
So you want to build up. First off, there's a lot of requirements, a lot of regulatory issues that say you can't talk about your deal. Sort of like Fight Club, you can't talk about your deal until it goes live on the platform. That's the number one thing that gets issuers. Remember, if you're a founder of a business, you're issuing shares, so they call you an issuer. That's the number one thing that gets people in trouble, because they get on Twitter, they get on social media, and they're talking about, hey, we're going to raise some money. In the Reg CF world, you can't do that. And so you do need to plan it out. You need to get yourself in order. Somewhere on the internet, there's a book called Raising Money. I wrote it with Maureen Morat. And it gives you a checklist. There's like 26 things that you need to know before you actually go to raise money. And so you should think that you're actually probably going to spend 6 months to a year getting your stuff together. You need to have, depending on the amount of money you raise, you need to have your financials audited or certified. If it's over $500,000, you need certified financials. If it's under $107,000, you don't need certified financials. And there's some other little nuances in there. And so it might take you a year and a half to get yourself together to do a Reg CF. On the other hand, if you're doing a Reg A plus, say you're going to raise $50 million, you should be looking at 18 months, because it's not like overnight magic, because you do have to go through the regulatory process. So doing your homework, getting ready to go. And by the way, there was a crazy instance. A business was being acquired for $12 million, and the acquirer asked them for their taxes, and they're like, oh, we haven't done taxes because we didn't make any money. They had revenue, they just hadn't been profitable. And so if you haven't kept your books, your accounting together, it's going to take you longer to raise money, because even VCs or investors are going to be like, hey, let me see your profit margin sheet, your profit loss sheet. If you can't produce that, well, then you need to go get an accountant. They're going to charge you to put that all together. So think 6 to 12 months to get organized. If you've already got all your business documents together, if you're already organized, then you're not going to have that much time. You could, a fast way would be like 6 to 9 weeks, because you're just a very organized company. That 6 to 9 weeks you're going to spend on engaging your SEC lawyer, your securities lawyer, and 2, figuring out what is the language, what is the marketing collateral, what are we going to say, what are we going to offer, how much equity are we going to give, what is fair, what is the appetite of the market. Then when you reach out to any of the platforms, they'll typically say, hey, we have 4 to 6 weeks to review your deal. They go through their requirements, their objective requirements for getting on the platform, because the platform has to make sure you're not trying to run a scam, right? There's some risk there, so they have to make sure you're not trying to run a scam. And then once they approve your deal to go live, by regulations, you have a calendar year, right? You have 365 days to raise your funds. However, when it goes live, you engage your customers, you engage your audience, you engage your community. You should, a really fast, good crowdfunding campaign is 30 to 90 days. And so if you've got all your ducks in a row and you're ready to get your crowd engaged, let's say TF Labs has a audience of 5,000, right? That's in your community. But of the 5,000, let's say 10% are interested in investing, right? That's great.
Yeah.
That's 500. And so it's like, okay, of these 500, they're each going to invest $1,000, which is a really good high customer acquisition, or it's a really good high investment point. If you have 500 people put in $1,000, it's awesome. And so, but after that person makes their initial investment, you want to keep them engaged and tell them, hey, tell your friends, tell your family members, tell your church, tell other people that you've made this investment. You know, go to the bar, go get online and talk to your friends about, hey, I just made this investment in TF Labs because of this, this, and this, because this is where you use your crowd to syndicate the deal to bring in more investors. Yeah. And so you have a year, but the most successful ones fund within 30 to 90 days. And don't be shocked if in the first 30 days, nothing happens. Rather, the investments are slow. And in the last 60 to 90, they pick up exponentially. And you will hit a tipping point where the crowd becomes frenzied. It's like, oh man, I just saw you on CNBC. I just saw you on the local news. I just saw you on Twitter. I just saw you on a live chat with Jonathan. And now I want to get into your deal. And yeah. So you do have a year, but you should be thinking, do that homework so that you're going to close in the first 90 days.
Yeah, that makes sense. That makes sense.
And remember, last thing.
Yeah.
Let's say you spend $100,000 on your Reg CF deal, right? One, if you have a product, that's a sales and marketing. You're going to sell some product, which is going to help you. I'm making a triangle, by the way. You're going to sell some products, which is going to help you increase your brand and bring you more customers. And that's where Reg CF can be so interesting, because let's say you spend $100,000 trying to raise $1 million and you fail, right? You only raise $300,000 and you only raise $300,000 in investment. The next question is, how much did you see an uptick in your product sold? And it's like, yes, because that's why engaging customers can be so interesting. You can fail at raising your $1 million. You might only raise $200,000 or $300,000, but you might win because you had a hockey stick in sales. Just because you're running a marketing campaign, more people are visiting your business's website and they're like, oh, I don't want to buy $100 worth of stock or worth of shares. I just want to buy, $20 worth of your pen or whatever your good product or service. And this is why investment crowdfunding, in many instances, even though you might not hit your investment goal, that's okay, because you just invested money in sales and marketing. So I'm like, well, did you see an uptick in revenue? Because now we can talk about how many new customers you onboarded and what the lifetime value of that customer is over the next year, 5 years, 10 years, et cetera. And that's where it's a little bit weird when we talk about, did you fail at investment crowdfunding? Because it's like, we didn't hit the number, but we made more money this year.
Yeah, that sounds like a win.
Oh, and I should say that revenue is the best capital in the world. I think I stole that from Maureen.
It's true. It's very true. So, you touched a little bit about this, but, sometimes investors or VC or traditional VC might steer you away from that, is what you were saying. What do they think of a crowdfunding on the cap table in a future round typically?
They don't care.
Yeah.
No, because they said, here's why they don't care. You're telling me you got 2,000 customers to buy your pen. So, because the issuer gets to determine what type of shares that this person gets. So that the investor gets. So typically, they're getting Class B shares, Class A shares, but they might not have voting rights. So it's like, that's fine. Do you care? Because the benefit of that is you have 2,000 people who put in $500 for your pen company. VCs love this because that's so much traction, because it's like, oh, they're really using your product. I don't care what your product is. It could be a SaaS solution, right? And so the myth is it ruins the cap table. It does not, particularly with modern day technologies and how shares are organized and distributed and maintained. There's a dozen different businesses out there who will help you know exactly who's on your cap table, what shares they have, what voting rights they have, etc. So that's just an old myth that persists.
Yeah. The worst and best kinds, I guess, old myths.
Oh, I heard there's sometimes that crowdfunding money is stupid money. And so, because it comes from quote unquote unsophisticated investors.
Yeah.
I don't know a VC or I don't know an investor who's going to be like, oh, you were able to get $1 million of investment from stupid people.
Right. Yeah.
Like,
yeah. Yeah.
So yeah,
yeah. And so I've when you moving on the Reg A side, do you need to qualify for the Reg A? I mean, I know you have to go through, you have to submit through the SEC, but like, what are some of the qualifications? Do you have to do a Reg CF first before you can consider doing a Reg A, or does that not matter?
It doesn't matter. You can jump right into the Reg A field, but you should be thinking however much you're looking to raise, you're going to probably spend 10% of that number. So if on the actual raise itself. And so you need to be thinking lawyers don't work for free, first off. So they're going to organize this deal for you. And there's no such thing as free money. It takes money to make money. It takes money to raise money. And so if you're doing a Reg CF deal, where you can raise up to $1,070,000, if you've already built in if you already have a strong community, if you can get on your mobile device and engage 100,000 people, that's awesome. You actually already put in that work to build that community. It just didn't happen overnight. You've already paid that sunk cost. But people often don't think, what is my audience worth? Not in terms of my community worth, not in terms of selling them a thing, but engaging them as investors. So if you spent 5-10 years building up your brand and your following, that actually has value to it. And so how much money, time, effort, energy did you spend into building your community? If you're trying to do it from scratch, it's like, go start a Twitter account right now at this very moment, get 100,000 followers. Good luck, right? Yeah. You can spend to get that, but then you're going to spend hundreds of thousands of dollars trying to get 100,000 followers, or like real followers for actual customers. But if you're organic, if you've been using earned marketing, engaging people like TF Labs, right now we're engaged in earned marketing because we're providing a public service to everyone and be like, hey, this is information you need to know. So that's a sunk cost. It takes your time, energy, but you don't actually tabulate this anywhere. So if you're doing a Reg CF, you should be thinking, hey, I'm going to spend to raise $1 million somewhere between 60 and 120K, right? That's how much it costs to raise that $1 million. Unless you have an amazing community who just loves you to pieces and is going to invest off of one tweet. If you go into the Reg A plus world, you're still looking at about 10%, because it's like, oh yeah, you're going to go raise you're going to raise $10 million. You're going to raise $20 million. It's going to cost you a bit of money to do that. And again, because you have to get your marketing campaign together, get your regulations, pay your lawyers, etc., to actually raise money. So people think money is free. It's not. There are some sunk costs involved in raising money. And I call them sunk costs because you may not hit your raise, right? You may be trying to raise $5 million and you're spending $500,000 to raise $5 million. And people say, oh, those costs of funds are so high. What are your other options if you're a startup? The bank is not going to give you money. Yeah. A VC is going to take, basically, they're a shark. They're going to take so much of your company. You now have a new boss. So this is another, when you think about investment crowdfunding, it's not perfect, but it's an alternative that you should be aware of, so you can consider, so that when you do go to raise money, it's not bank or VC, right? You have more than two options. And this just gives you that third option that you can explore.
Yeah, I love it. I love it. Samson, what is a question that you have that you want to ask our audience? Something that they can be thinking about, or what's a question that they should be kind of thinking about as they go about their day, as they continue to think about crowdfunding?
What's the value of their community? That's it. Because people don't often think about the value of their community. And this goes back to your sunk costs. If you're part of building a brand is also your personal brand and also your business brand. I love reading Wendy's hamburger place on Twitter. They're so funny. They're always roasting somebody, right? Yeah. And so that's super cool engagement. So if you're a smaller burger joint, I'm just going to use a burger joint. How are you out building your brand? How are you out building community? How are you out building engagement? Because when you go to raise money, one of the first questions is, what's your traction, right? If you're a plumbing company and you have a social media handle that you have 10,000 people follow you, not and don't even engage you for plumbing, they just like the way you do commercials or you do engagement, that's valuable. Because if you do go to raise money, you're not stuck as this plumbing company to just your tiny part of the world. Like, it's not just in Seattle. You can raise money from across America, from anywhere across America. So the question that you need to be thinking about is, what is the value of my community, and are you building your community? Because it's like when you reached out to me and you said, hey, come on to my podcast, I was like, yes, let's do this, right? Because as a business leader, this is not just for me, it's just for, if you're an entrepreneur, you need to be your business leader, you're a spokesman for your industry. I don't care if you're in the pen industry, right? You're a spokesman. And so what are you feeding your followers? And the reason you need to ask yourself, what are you feeding your followers? How are you supposed to be recognized as the greatest pens manufacturer or salesman in the world if no one knows what you do? And so part of it is you need to be feeding your followers some type of educational content, some type of epiphanies. Like on my Twitter at Hustle Fund Baby, I tweet out random things that I remember that later when I'm talking to entrepreneurs, it's like, oh yeah, being an entrepreneur is one of the most emotionally draining things you will ever do. Because you see the sexy side, but you don't see like in the trenches. Right. And so that's what you need to ask yourself. What are you feeding your followers? Because that means you need to be a leader. You need to be a leader in your industry, a leader in your space, so that when you turn around and say, hey, hey, customer, give me your hard-earned money as an investor, they have faith in you. They believe in you. They're like, Jonathan, he's great. He's a leader in his company, in his, not only his company, but his industry, because you're always feeding your followers. You're building that engagement. And that's where you take that engagement and then you monetize your community, but you're also giving back to them because you're telling them, when you invest in me, we win. Yeah. Right. When you invest in me, we have a chance of winning. Right now, your customers, they love your good product or service. But if you haven't engaged them in investment crowdfunding, they don't even know that they can be part of your business. Right now, they're just your customers. You want to make them your investors. So you need to ask yourself, what am I feeding my community, and what's the value of that community? Then everything else will sort of fall into place.
Yeah, I love it. Samson, thanks for joining us. What are some good ways that people can stay in touch with you or follow what you're up to?
You can check me out on LinkedIn, Samson Williams. You can follow me on Twitter at Hustle Fund Baby. I have some nerd stuff on Space Channel, spacechannel.com. I'm a host of the Space Economy Show. So yesterday we did a segment on solar power in space. So we often talk about solar power here on the Earth, but I wanted to talk about solar power on Mars. And that was really just a setup so I could stump my co-host when we talk about wind power. There's no wind on the moon, spoiler alert, but there's dust devils on Mars. So when we get to Mars, what new technology will exist to power Mars? It's actually going to be wind. But we're refining that now. British Petroleum made a $1.1 billion investment last week on offshore windmills here in the States. Why that's important? Because the technology that we're developing to prevent the windmills from corroding in the ocean, we're going to export that to Mars and beyond, because people don't often think like, how are you going to provide power on Mars, which is so exciting, particularly in the startup world, because you get to talk to so many entrepreneurs and thinkers who are building solutions for environments and ecosystems we've never been to. Yeah. And in the meantime, they're like, the folks from AI Factory who do 3D printing homes, NASA recruited them because they were in Austin 3D printing homes for homeless people. And NASA recruited them and said, hey, can we use your technology to 3D print homes on the moon? And then that's how they got a contract with NASA. And I was like, why didn't I think about 3D printing homes for homeless people and how the government's going to use that on the moon? So that's a long rant about Space Channel. So I apologize. I just love doing stuff in space. So you can find me at the Space Economy Show on Space Channel, as well as on LinkedIn.
Excellent. Excellent. Well, Samson, thanks again for joining us. Good to see your face, if through a television or a screen.
That's great. Next time, if I tell people, if you see me in person anywhere, just ask me to buy you a drink. I'm 100% down to do it. I'll probably also buy you dinner. I can't wait to get back and engage humans in, human form. It's going to be exciting.
Definitely. Well, everybody, thank you for listening to another episode of the TF Labs podcast. Please do us a favor. Make sure that you're liked and subscribed. Make sure you're subscribed on the channel that you're watching, and do us a favor and fill in those stars. It goes a long way to making sure we get more people building our community, as Samson said. So you can follow me on Twitter at JGProduct, and you can learn more about TF Labs at tflabs.io. Thanks so much, and we'll see y'all soon.